You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on Cyclesman.com. Happy New Year, Tim.
Happy New Year to you, Jim.
Today we're going to take a look at how the charts predicted the past year and how that worked out, and what your charts are saying about the new year. Well, let's take a look at the year past, Tim.
Well, Jim, last December 2013, let's start with commodities. I reported that the 3-year cycle in the CRB had set up like it did back in 2008, and that, commodity prices were going to begin to go lower. And we did see, they just kind of flatlined through the summer. And then starting in June, July, it was back in July, if you look at a chart, we saw oil start to weaken. And then in the August research letter, I reported that the findings or the data from last December with the CRB and that setup, and we'll talk about that some too as to what I mean with that, but that setup was further confirmed, and then from there commodities fell apart, and oil is where it is now. I think intermediate term, cyclically we should be getting close to like an intermediate degree bottom in oil. I think it's going to be counter trend. And, once that intermediate degree bottom in oil and the commodity complex takes hold, then, it's going to go until we get set up to cap it, and then the counter trend bounce will be over. And then I look ultimately for oil prices to continue much lower. When you look at it, and this is not a prediction, it's just a general comment here, but when you look at oil, there's a tendency with the seasonality to see bottoms around this time of year, and coincidentally we do have some cycle lows due, so that's kind of lining up. And then there's a tendency to see in the May, June, July time frame to see the tops seasonality. So that is kind of lining up. That's kind of an expectation, but we let the cycles guide us, until we get, like I said, a setup that's confirmed. Then, it's the existing trend's going to stay in force. But what I'm trying to say is that I am expecting a counter trend bounce in oil and commodities, but then I think ultimately it goes lower. And I will say I have data, have research. It's based on statistics, and ultimately I think oil goes into the 30s. That's what the numbers say. The dollar, we've been saying for years, and I do mean years, that the dollar has been making a very, very, very important bottom. And for the last, 4, 5, 6 years, it's been bouncing along the bottom and is creating a low. And I've said in the research letters that it was making a very important bottom, similar to like in the late 80s and early 90s before it launched and went to like 121 or 122 or whatever it was the index went to. And I think that bottom obviously is in place now. I mean, we were saying that all along. The dollar's broken out. We've moved above the previous 4-year cycle high. The dollar is very positive. Again, nothing goes in a straight line. There's going to be corrections in the dollar. I think that we may even be at or near some intermediate degree tops there. And then after, that runs its course, I look for much higher dollar prices. I think the trend there is up, so things have changed.
And just a quick mention, we are talking about the U.S. dollar. Tim, what do the charts say about gold?
Well, with gold, we had the 9-year cycle top back in 2011. We've been bearish on gold since then, and in conjunction with that top. Currently, we're at an intermediate degree low, and the bounce out of that low should be counter trend ultimately, and it should be followed by lower prices, with the resumption of the downturn into the next 9-year cycle low. As for equities, I'm very surprised that equities have held up throughout 2014 as well as they have. That said, we've said all along, ever since the rally out of the 2009 low began, and I know this almost sounds, it does, I'll just say it, it sounds discrediting. But when you get anyone listening, if they want solid research, I mean, there's no way I can make anyone see this in a phone call, in an interview, but I have the research, meat and potatoes. And this advance out of the 09 low, we've said all along that it was occurring within the context of a secular bear market. I believe that 100%. You could hold a gun to my head and not make me change my opinion, because I'm looking at the data. It's data. And and it's like trying to convince me that a goat is a cow. I mean, I know the difference. And I'm looking at what I'm looking at, and that's not being closed-minded. It's indisputable. And when you look at, like I said, volume characteristics and on and on and on, and this rally is really no different than the rally coming out of the 02 low. The secular bull market, based on data, topped in 2000. It was a bear market rally that they pushed to a new high because of the manipulation and the liquidity infusion and all the shenanigans and everything that created the housing bubble and the commodity bubble and a semi-stock bubble back in 2007, of course, in equities in 2008 with commodities. It's the same thing. And I said then the rally would go until we got the setup with the DNA markers, and then we got it. And the first time we got the setup then, in 2007, the setup appeared, boom, that was a top, and the thing cratered. And I said all along that was an extended 4-year cycle, and that we should move below the previous 4-year cycle low based on statistics and data. And I know that was a hard concept to grasp back then, but it happened. And I said that to say this. This rally out of the 09 low that is still ongoing, we're in month 70, and it's the same thing. And I know that is a hard concept to grasp, just like it was back then. Back in 2000, late 6 and into 7, people wanted to say that the 4-year cycle low occurred in 2006, and then we had a brand new 4-year cycle and everything was good. And, and people try to look at price, and they try to when something doesn't make sense, they try to make sense of it. And so they can find convenient answers, and saying that a 4-year cycle low had occurred in 2006 it gave some order to the chaos back then, to what didn't make sense. Well, it was wrong. And I knew it was wrong based on statistics and data. And that same statistics and data, I've seen some stuff now where people are trying to say that the last 4-year cycle low occurred in 2011 and that having all these reasons why this is a new 4-year cycle, and they're trying to explain away what they can't otherwise explain. And that's the beauty of the DNA markers and the statistics and the hardcore data. And this is the longest 4-year cycle extension, according to the data, ever, since the inception of the Dow Jones Industrial Average in 1896. And it's a statistical fact that extended 4-year cycles end badly. And the longer it's stretched, the worse the outcome. And I'm convinced that this is a bear market rally. Yes, I'm surprised it's lasted as long as it has, but we haven't had a setup with the DNA markers to cap it either. And that's not double speak. I mean, it is what it is. I've said that all along. It's going to rally until we get the setup to cap it. And we have seen, until 2014, we saw nothing. And even at the 2011 top, I said, no, we're going higher, we're going higher, we're going higher. Well, in 2014, we started seeing a couple of setups try to take root. It'd try to develop, it'd be a little crack in the foundation, but then it'd quickly morph away. It never took root. And we've seen throughout 2014 the setups trying to appear. And so I think that the advance, that alone tells me that, obviously a 70-month advance is extended. But now we're seeing, cracks in the foundation are coming more frequently. It's trying to set up the manipulation. I think, in my opinion, we're seeing strange events with like timed news events and all kinds of things to try to blow out setups. And it's worked. They managed to kick the can down the road. But, you just can't deny these statistics and continue to stretch and manipulate a market indefinitely. And for that reason, and because of this, like I said, the fact that it's stretched and all the underlying statistics, I feel that this is the most dangerous market since the inception of the averages in 1896. And our job and what we're doing at Cycles News and Views is monitoring for the setups. Once it occurs, then you need structural confirmation of it. And then once that die is cast, then I think it's lights out. I mean, I really, really, really am concerned about the downside here. And the thing is that the other thing that makes it so dangerous, and I said this back in 2009, I said the longer the rally continues, the more dangerous it would become, because the more convincing it would become. And so to try to tell someone that we're in the same or worse boat as we were in 2006 or 7, like I said, it's almost discrediting, and it's very difficult for people to believe. But like I said, you couldn't hold me at gunpoint and make me change my opinion, because I'm looking at the cow, and you can't tell me it's a goat. I know what I see. And you know, I think that we could a setup could occur. You know, maybe something morphs here, maybe it's a month, maybe it's 6 months. I don't know. Maybe they stretch this thing to 80 months. I don't know. But when it happens, we will know. We'll see it. And we'll be able to identify it, and we'll know when it's confirmed structurally. And then, like I said, I don't think there's anything that can be done at that point. I think the die will be cast.
We'll have more with Tim Cyclesman Wood right after this.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. We're speaking with Tim Cyclesman Wood, editor of Cycles News and Views on Cyclesman.com. Tim, any last thoughts as we head into the new year?
Yes, Jim. Actually, I want to kind of reach out to people and almost plead to them, if you will, because, like I said, I understand how difficult it is to believe and much less understand the things that I'm saying. And it's just like, imagine this. I have had people tell me before, like back in 2008, I identified it on the air with my buddy John Grant, and it's in print, the top in commodities the week it happened. And I said, you know, because it was a statistical fact, I mean, it's real easy. Once you do the data mining and you have these statistics in your favor, then and you see that setup happen, the setup is the opportunity. And then once the opportunity presents itself with the setup, then it has to confirm with structure, market and cyclical structure. And so that's something we look for. And then once that happens, then the wheels are set in motion. It's like switching the tracks on the train at the junction, you know, I mean, it's done. And so, you know, calling the top back then in commodities, or in oil in 2008, when everybody was talking about peak oil, and everybody was talking about, you know, oil going to $200 a barrel, and it was at $144 a barrel, and you call this top, well, obviously you're an idiot, right? I mean, this guy's lost his mind. And the same thing back in 2007. The same thing with gold. Everybody knew the dollar was going to 60 and gold was going to $2,000, $3,000, $4,000 an ounce. The cycle said otherwise. We called the 9-year cycle top in gold back in 2011, not months and months and months after it. We saw it develop and talked about it in the research letter as it developed and called it. The dollar, everybody, like I said, knew that the dollar was going to collapse. We were saying, nope, dollar's not going to collapse. Been saying for years that it's making an important bottom and it's going to break out. And so I'm saying all that to say this. You know, it's easy to look at a market and say it's going up when it's going up because it's going up, or down, or whatever the case may be. It's very difficult to look around the corner, over the horizon, and see these extreme things like this that before they change, and understand what's really going on and that it's going to change. And that's what we do. And those same methods, where I say I'm reaching out, is that I hate to see people hurt because they're not paying attention, because they have been brainwashed because of the propaganda on TV or whatever source, or the magazine tells them that things are fine, or whatever the source may be. When I know these methods work, I am 100% confident that I know, based on these statistics, where we are, what it's going to look like and what the outcome is going to be. So I'm just saying that this call is really no different than any of the others. And statistically, they've all worked out before in the past. And as extreme as it may sound, just think about those other calls. And, if you want data and follow along and understand what's going on as we go into the new year, it's available at Cycles News and Views. And I just encourage people to take advantage of that and don't be sucked in. I know it's hard to believe.
Tim, thanks a lot for chatting with us. Happy New Year's for you and your friends.
Happy New Year, Jim, to our listeners. And I want to thank you for having me. I know that, like I said, the message has been the same, and I am surprised that this thing has held up. This year, I just have a hard time seeing this continuing, but we are monitoring it, and hey, maybe it does. Maybe it holds up. But again, we're going to know.
Tim, thanks again.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. You're listening to HowStreet.com radio. You can find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. Comments about the show can be sent to info@HowStreet.com. I'm Jim Goddard. Happy New Year.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.